What's going on, everyone? I am Charles Moon, the disciple of trend, and this is my podcast, Buy High, Sell Low. Just want to mention that stock and stock options trading does involve a substantial degree of risk and may not be suitable for all investors. Past performance is not necessarily indicative of future results.
All right, so now that I got the intro out of the way, let's talk about some interesting things in the marketplace. Now, listen, I have a general idea, ladies and gentlemen, about how I want my first few podcasts to go. But what kind of makes me is that I just go on and talk and then drop a lot of info and then I get back to the original subject. So if that takes place, you guys will get used to it. These aren't long podcasts. We're going to try and keep them right around 30 minutes as much as I possibly can. And I want these podcasts to be informative and enjoyable. You know, it's not just information, it's infotainment, right? So let's talk about the state of the market. This is a kind of important factor. Today, it's June 6th, 2019. I am recording this after the market closed. The Dow today closed up 181, up 40 in the NASDAQ, up 17 in the S&P 500. 3 days in a row of range extension after we had a sharp drop in the NASDAQ. Now, the Dow actually almost finished positive that day, 3 days ago, and the NASDAQ was down around 1.5%, and then I believe it was down at the low point on 1.5%, but I believe it closed down around 100 points. The following day, we rallied 160 points in the NASDAQ, and subsequently, we've just been stacking on since. Well, here's a good example. You could see how heavy Apple dropped. This day's range here, let me kind of expand this. This is on June 3rd, $7.65 range. Apple normally trades over the last 30 days, $5.15. So we had a greater than normal trading range. And of course, the volume for the day was 40 million shares. Apple, on average, over the last 50 trading days, averages 29 points. So let's just say 30. So they're already a third above average in terms of volume. So, basically 10 million shares. Multiply that by, what was the price of the stock? $170. And that's how much additional capital was flowing around in Apple. And then, of course, Apple hit 170.27, and today Apple closed at 185.22. The strength of buyers, the bulls coming right back. And what's the environment? Well, we're trading as if we're going into a NERP or ZERP environment, interest rate environment, zero interest rate policy. Think about that. That's kind of what people have been screaming for, right? Markets, economy, there's concerns. Oh my gosh, we need to cut rates. Are you kidding me? I use this example a lot, ladies and gentlemen. I don't want to kind of put a number on things, but a lot of my clients are, let's say, older than I am. I am currently 40 years old. And they tell me, well, in the 80s and the 70s, you wouldn't believe what you would have to pay in regards to interest rates for your mortgage and for your car in comparison to where we're at right now. And that's still not good enough. It's not good enough for the masses. It's not good enough for Wall Street. People are clamoring for it. Now look what's happening, folks. Fed members, just one meeting ago said there is absolutely no reason to really consider this, right? It's just, they're like, well, it's not really a consideration. I guess if we have to, we will, but we're not thinking about it now. And then, of course, China basically walked away from trade deals, and then all of a sudden market fluctuation, and then now it's global in sense of the impact that it's having. And then economic data drips down from China. Our own economic data is dripping down. Now all of a sudden we had initially James Bullard kind of basically hint at it without actually hinting at it. And then Powell, of all people, basically said it's very possible. It's a consideration. It's basically an option now. And then Evans kind of said it. And then we're basically having more and more Fed members. I think there are some non-voting members that are not a part of this inner circle. But, the members that matter, the ones that have the actual votes or the voting power, are just basically hinting at this being a possibility. And then when you look at the future, I don't know what they call it, but the future, it's actually like a tradable asset, the future possibility of the rate cut, it's like at almost 100%, or it's at 100% for December. That's crazy. I think initially it was at like 70%, then 80%. Now it's trading in that range. I may be wrong. I don't know. I don't look at it, so I don't really care. I just heard glimpses of it. And that's kind of how I piecemeal my information. And don't be scared, clients, if you're listening. I do a lot of research. I retain information that I feel is relevant. It's selective memory, so to speak, but it's worked out well. Now, listen, getting back to the state of the market. So here we are, bouncing back. No worries, no fears. Some retail clients are asking me, is recession a possibility? And what's going to happen? Are stocks going to free fall? And I get that a lot. It's funny. I've had clients just kind of just stay away from trades lately. And really, realistically, it's kind of been all year. And, I'm not saying that they have to take any trade signal that we give. I always recommend paper trading when you're trying to learn a methodology. But the fact of the matter is that these guys are fairly active in the markets with their own money, regardless of whether it's our signals or our guidance or stocks that we talk about or look at. They're doing their own thing, and that's okay. But a lot of them have been much more passive, when I know in their nature that's not how they are. And that's just because of what happened towards the end of 2018. And let me just kind of point out the SPY. And what I mean by that, it really kind of started in, August, September, leading into October, and then the November to December fallout. But the reason why October and November stick out to me so much was the volatility, the swings. Yeah, it's condensed in this box. But, when we talk about the SPY going from, 260 to 280, and it's happening in like a week and a half, and then it drops the same amount. And what preceded that was just a massive fall off from 290 to 260. That's that 10%er that they talk about, that correction territory mark, right? And because of that, and because of the effect that it was having on individual stocks, people were getting burned. They just were not ready. They were not in the right position. And it didn't happen like, one given time. I mean, the initial drop was like that, but the initial drop was followed by a deeper drop. So that basically meant a lower high and a lower low. This was tough. This was tough because buyers were jumping in here with the belief that we're going to do what SPY has consistently done, which is bounce back and then race back up, test the highs, break the highs, extend on range, pull back, go to higher highs, trending up. Well, this is where being a chartist kind of comes into play, and recognizing this. It's okay if you're burned here. Rightfully so. Vast majority of retail traders were. But when it happens again and again, and it's all concentrated in the same range, and the same reaction has occurred. What do they say? Fool me once, shame on you. Fool me twice, shame on me. That is what happened here. And then when it finally gave way, it was the biggest move. It was the strongest move. It was horrific in the eyes of the bulls. It was a dream come true in the eyes of the bears, the I told you so's. The guys that have been screaming on the top of their lungs that the market's going to unravel for, I don't know, the last 5 years, and they've been just oh so wrong. They finally had their moment in praise until it was just wiped out because 2019 opened and then that happened. Right. So I get the ideology. I get the confusion. I get the concerns, and rightfully so. I hate to say it, ladies and gentlemen, but when there are geopolitical news as significant as such of the trade war that's taking place between the United States and China, just two massive powerhouses and two countries that are undeniably reliant on each other, going to basically war with each other. Not in the physical sense of war, but you cannot say there has not been a war of words. And, I don't know how this podcast is going to go. There may be moments where I just won't be as, in essence, kosher, right? But I'm going to be honest with you. How stupid is all this? Like, it's almost childish. Right? It's almost childish at how this is all breaking down. And yet here we are. And so people are left to say, well, I don't know what to do. The market swings are too much. Yes, you have to have an appetite for risk, but this is where certain, how do I say this? This is where certain aspects of trading really come into play. And being able to recognize strength and weakness and strength. And that tends to give guidance towards what I would say possibilities, opportunities, and in some instances, strong opportunities for big moves. So what do you mean by that? Okay, so my Twitter handle on Twitter is Disciple of Trend. This podcast is Disciple of Trend. There is an unseen beauty in trend. Uptrend, downtrend. We talk about it, we hear about it, but people don't really understand it. When you assess as a trader risk, one of the, ways to swing odds in your favor, whether you're a buyer or a seller, is to incorporate some of that predictability. Now, of course, within that predictability, depending on how much room we want to play within that predictability, there's instances where stocks could go up and we lose on that opportunity, meaning we end up walking away, maybe scratch, break even, or a loser, or a very small winner. And those are where frustrations could come in, even for the seasoned trader. But the longer term aspect and the beauty of that aspect is that predictability comes in. And when predictability comes in, you are trading with what I call the current of the ocean. You're not fighting against it. I understand being contrarian. It's inevitable with people. It's in our human intuition saying, this can't keep going up, as we watch the stock go up higher. And so part of the human intuition is that at some point this is going to stop. And at some point I am going to be able to make money when it stops by playing the other side. People think that makes them a great trader. That makes them a very risk-loving trader. Yeah, I get it. You don't have to allocate a lot of risk, but in the grand scheme of things, that's just risk you may just never have to allocate. Why fight that current? If you have to survive in the ocean, right? You're on some beautiful yacht and you're like 3 miles away from shore, and then all of a sudden something happens and you're just off of this yacht and you can't, they don't know that you're off, you fell off or you got knocked off. They just keep on going. So your only chance of survival in this vast body of water is to swim to shore. Well, it's pretty simple. Your chances of survival increase greatly when you swim with the current. You, as a small, simple mortal, you could be the greatest triathlete in this world, but you fight against that current. And if you fight long enough, the ocean is going to win. So your chances of survival in that instance is always going to be greater when you swim with the current versus swimming against it. Now, that is that exact same ideology with trading with the trend versus trading against it. Well, if it doesn't make sense, let's just say this. If your trading account is $100,000, which is pretty darn big, what do you think it's going to do when there's $15 billion going against you? Does your $100,000 in terms of speculation have any chance against that $15 billion? Like, of course not. That is the theoretical idea of trading with the trend versus against it. I don't know what it is, but people try to outsmart the markets all the time. I don't believe in that. Trading, it breaks down to a law of averages, opportunistic, aggression, and timing. But, timing plays a role only if you allow yourself to take advantage of that position of timing. Maybe buying into a stock because you believe in the trend, you love the opportunity, you see a great reward to risk, and next thing you know, overnight they announce that they are potentially being bought out by, let's say, Amazon or Microsoft. Stock goes up 30%. No way in hell right? Right? You could speculate all you want, but you didn't know that was going to happen. But the difference is that you saw an opportunity, you made a decision, and the timing was just great for you. It's the same thing. You could buy into a stock and get an upgrade, and then next thing you know, it's up 5% overnight. You could cash out. That's the thing. And so let's talk about this, all right? And this is kind of what I was saying earlier, where I start on one thing. We're talking about, the trade wars, and now I'm here. But let's talk about this one thing about trend, okay? This is obviously near and dear to my heart. If you recognize trend, it could be from indicators, it could be from just basic charting. If you could recognize trend, it really does shave down a massive portion of stocks that you should be looking to actively buy as a trader versus actively sell or short as a trader. That makes it just really whittles the field down, and then you could focus more and more. Now, we're always going to have companies that we like, right? We're always going to have names or sectors that we prefer. Maybe it's based on success, knowledge, familiarity. There's a lot of different things that come into play. I'm never going to say don't be contrarian and look to buy the dip on certain names like Apple or Facebook or whatever. But have a rhyme, have a reason for it. Have a reference for it. Don't guess. Don't say, oh, it can't go any lower. This is the time to buy. Don't do that. Don't do that, because you know what happens? It goes lower. Have a point of reference. Now, I'm just going to talk about trend a little bit more, and we'll get back to the trade war really quick. The beauty of the trend is that you are also buying into consistency, right? Consistent performance for months on end. This is extremely important. What causes this consistency is a mass sentiment, right, in one particular direction, and a desire for that stock and for that opportunity. And there's FOMO out there, which is an acronym for fear of missing out. There's people that are just only targeting dips to buy. And then there's people that kind of tune in a little late to a stock, Maybe they heard through the grapevine. Maybe they heard through CNBC and Bloomberg and, whatever financial networks that are out there. Maybe they heard it on Twitter. Maybe they heard just some random guy talking about it. Maybe they read something on Facebook. And one of these podcasts I am dedicating solely to that company. And once you hear this podcast, you'll kind of understand why. Right? Like, why? Well, again, another story. But let's also take into account, guys and gals, that, I like to look at stocks that trade on 1 million shares average per day. There are a lot of names, especially momentum names, that I absolutely love that probably averages around 300,000 to 400,000 shares a day, but I won't touch it. And there's a reason why. When stocks trade, and usually there's also a price profile. It has to be more than $20. But when they trade on a scale of 1 million shares average over a 50-day period, it tells me that there is a high level of retail and institutional activity or fund activity. And this is extremely important because unless there's just a mass amount of retail traders targeting one particular price at the same particular time, okay, now think about the probabilities of that happening. There may be a small group, a small selective group, technical based traders, but I'm telling you right now, it still wouldn't be as much as what these firms and these funds can provide. Because of their interest, because of their liquidity and their capital, they provide the liquidity at these particular levels that I look at from a technical standpoint, that I also speculate that institutional traders will look at from a technical standpoint. And it's going to sound crazy. But again, support and resistance is only defined by more liquidity on the bid and the offer than there is demand. More supply than demand at that one given price, which means that the stock cannot push any further until they basically take out all that liquidity at that given bid or at that given offer. Hence, stock reverses off of that level. Hence, traders look at that level. Hence, it becomes opportunities and it becomes defined and it becomes historic. And references to recent history is what technical trading really is. And in past history, it gives us guidance to what the potential future may be. And so within that trend, if we see these floors or these ceilings continuously coming into play at higher prices, that means the big money is still looking and demanding and wanting. And so if that interest and demand is there, the progression of stock price continues. And that's why stocks like, let's say, TWLO, for example, make these kind of moves. Yes, dips and then moves up, dips then moves up, dips then moves up. These green lines show us the extremes of price. The highest printed price and the lowest printed price, meaning the most extreme high, most extreme low. So when they both, and I know I got a lot of things on here, teaching moments, that'll come too. But a lot of things on here, when you see the top and the bottom moving up in sympathy, meaning they're both moving up, that's telling you, that is literally drawing a picture of higher highs and higher lows. And for those that are familiar with what an uptrend is, that is the true definition of an uptrend: higher highs, higher lows. Now, there are going to be people that are going to be tuning in that are not technical based traders and have no idea what I'm talking about. And I slowly want to educate you folks. Don't give up on me so quickly. Stick with me here because I'm going to reference and talk and then prove and show to you, okay, why this is important to know. Think about it, ladies and gentlemen. So the whole theoretical idea of the stock market has always been supply versus demand, okay? That's how it's always going to be. It still is, you know what I'm saying? It still is supply and demand. And so the advent of technical analysis has only come to the, come to the light over the last few years, quite honestly. Let's say the last decade. And so because of that, the advancements in trading and technology and ideology has been the greatest over the last 10 years than all of trading combined. So think about where we're at right now and the advancements of what's happening. It's the same type of advancements we are seeing in society, right? With, let's talk about artificial intelligence and self-driving cars, and, your cell phone can order food for you you could just like kind of think about it and it's there. And like, it's a different world. Even from just 5 years ago, technology is advancing. And so I say to you, ladies and gentlemen, if you're serious about being in the markets and doing well, and I mean performing well, right? Nobody wants to put money in the markets and lose it. If you want to perform well, you should absolutely take technical analysis and learning very, very seriously. And I'm going to do that slowly. Remember, this is just an introduction podcast. I'm hoping that I pique your curiosity. So the beauty of trend allows you finding opportunities and having growth. It doesn't matter if you're a trader or an investor. It's an important aspect. Now, you obviously have to consider the fundamentals. Don't get me wrong, all right? I absolutely care about the fundamentals. But when we look at these, like, what we consider growth names or high beta names even, we don't really have a ceiling in these names because we don't know where they could be. It's so new. Technology is so new. The reason for their evaluation is so different. I'm sorry, but I can't have some 70-year-old analysts, okay, tell me that a cloud company isn't worth a thing to him when everything has transitioned to cloud. No, what I need to believe is Wall Street and what they feel and where their money is being parked. Because same thing, they're not in it to lose. Hedge fund managers maybe. Those guys think too much. They're only fundamental. And so these guys, these activist fund managers every year are having smaller returns or even negative returns. Whereas guys that run Renaissance Technology and Citadel and Virtu and every other crazy HFT firm are crushing the game. Assets under management is blowing up. They're turning hundreds of millions into billions and turning billions into more billions, while the other billionaires are getting destroyed. And it's tough. It could be very scary, but it could also be very, very good. Case in point, TWLO. Listen, I'm not going to talk about my trade signals in this podcast unless, people ask for it. But ultimately, I will absolutely share. But if you just take a quick glance, I'll let you figure it out on your own. Now, listen, we're going to wrap this up here shortly. Talked about a lot about trend. Didn't talk enough about President Xi and Trump, so I'm going to leave this. In the next podcast, I'm going to touch up on it again because it's such an important part of what's going on in the markets, and I plan on doing these weekly. But right now, based on this market, what everything is going to be kind of eyed is whether we could come to some sort of even passive agreement to just meet at the G20 summit. And if news of this comes out, markets are going to react in a very positive way. The markets want a trade deal. China wants a trade deal. The U.S. wants a trade deal. Trump is going to want a trade deal. He wants to pin his hat on something in the history of our country. And this is something that he absolutely can do. I also believe that he's going to push for legalization for marijuana. That is purely speculative. I'm not going to say anything much more besides that for now. But in the future, I absolutely will. Think about it. Opioid crisis, how do you combat it? It's not always, two wrongs make a right. But quite honestly, we're seeing incredible positive news from a medical standpoint from the CBD and cannabis industry. Why not? So, to wrap this up, guys and gals, I hope you enjoyed. It was a quick 30 minutes. Like, as you can see, I could ramble and talk, and my gosh, if they allowed me to do 2-hour podcasts, I will blow your mind away. But I'm going to condense it. I'm going to focus and talk a little bit more on trend and names and opportunities. And it's important, right? I talked only barely about Apple and Twilio. It's important that you tune in. So, guys and gals, coming up in the near future, I'm going to need content. This is what I would like you folks to provide if you choose to do so. You can email me, all right, podcast at prospertrading.com. Okay, podcast at prospertrading.com. DM me or at me on Twitter at Disciple of Trend. On YouTube, we are going to post this, hopefully, on our YouTube channel. Leave a like, leave a comment, heck, share. That is where, if you really want to know, I want you guys and gals to share. All right. This is my Twitter page right here. You could take a look. Disciple of Trend, as you can see, prospertrading.com. And by the way, I want to thank Prosper Trading for allowing me to do this. They're kind of just putting their faith in me to offer out content, and it starts with our leader, Scott Bauer, CEO. I'll have him on, and I'll kind of give you my love story on him. But seriously, guys, thank you. Thank you, Scott. Thank you, Prosper Trading Academy. Thank you, folks, for listening in. I hope this was somewhat informative, definitely entertained at some point. And again, share, like. But the whole purpose of that was, I want you guys to at me. Ask me questions. You want to talk about stocks? Give me a stock to talk about, right? Please don't be like, what do you think, so-and-so is going to do on, June 23rd? Is it going to go up or down? I don't know. I can give you, some sort of guesstimation, but, let's talk about stocks, what your interest is, what my interest is. I'll tell you right now, we're going to talk about a lot of momentum names. Twilio type, Coop, C-O-U-P, Roku, R-O-K-U. Everybody knows about Roku, right? We're going to talk about our Apples and Amazons and Facebook. Of course, I already told you I'm just ready to dedicate one whole podcast to Facebook. And if you want my opinion, why I think it's going to be one of the greatest companies. It already is, right? But really, one of the greatest companies in the history of mankind. And you're like, Facebook? Yes, Facebook. For so many different reasons, right? But if you're not following Veev, V-E-E, V-E-E-V, right? And you're not following Coop, you're not following Paycom, P-A-Y-C, or is it GPN? Yeah, GPN. Yeah, global payments, like these payment processors. You're like, what do you mean? Well, this is a stock that's gone from 100 to 157. And if you look at Paycom, and I need to wrap this up. Paycom's gone from 120 to 219 this year, by the way. Okay? We're not talking about from the 52-week lows. This year. If you're not following these names, you need to tune in. I got tens, if not hundreds more like it. Like, we could talk about, the obesity and McDonald's, of course, hitting, all-time highs, and freaking Pepsi Cola and Coca-Cola following suit. I mean, look at these stocks. I don't know if Pepsi and Coke are at all-time highs, but they're both at 52-week highs. They're like impervious to the downtrend once they started going up and became technical. We'll talk about it shortly. But I do want to say thank you, folks. Thank you. Don't forget, like, share, comment, question at me, all that good stuff. Socials. It's up to you guys and gals to get this bigger. I'm probably going to do this, regardless. So I guess you don't have to, but I love you for it if you do. Have a great one, everyone. On to podcast number 2.
Don't forget to like, comment, and subscribe. Also follow us on our socials, Facebook, Twitter, and YouTube. If you have any comments or questions, you can email me, podcast@prospertrading.com. Thanks, everyone.